Good afternoon, everybody. Welcome to the TraderMerlin Show. It is your weekend edition. Wrapping it up. I know, short week this week. Apologize for missing Tuesday, Wednesday, Thursday, but I had a fun time, a great time up in Las Vegas, Sin City. You see the wonderful graphic of me leaving Las Vegas with a smile on my face. And, you know, anytime, I was fortunate, as you guys know, I like to play blackjack. And within the first few hours of being there, had a great run on blackjack. And when you come back from Vegas with more than you went there with, always a great trip. So cheers, happy Friday, everybody. Hope you had a great week without me. Seemed like nothing that exciting, just a few down days, but all in all, hopefully some opportunity for you. So let's talk about my trip to Vegas. I'm going to start off with that graphic. Love going to Vegas. It was kind of interesting. I don't know if you guys know this, but the Formula One will be coming to Las Vegas in November. So the streets of Las Vegas are absolute chaos as they're repaving the entire strip plus all the side streets needed to make the Formula One race work in there. And kind of excited for it. I like Formula One. It'd be interesting to see how, cars doing 200 miles an hour down the strip would be pretty crazy to see, especially with bleachers on the sides. Also, the Sphere in Las Vegas is just jaw-dropping. That will be opening September 29th with U2. I would encourage you guys to check that one out. It's pretty cool. So let's go to questions that came in about the trip to Las Vegas. And Thomas says, what was your favorite things from Las Vegas? I would say that my favorite thing, period, from Las Vegas was doing a live instructing. I had a session that I was doing on cryptocurrency and digital assets, which I thoroughly enjoyed. I actually had a great time. I love doing live sessions like that. Real quickly, I'm going to bring up something here for you guys. I love doing live sessions where I get to interact with people. When I do it in an environment like this, I don't get a lot of pushback. Not that I'm looking for pushback, but what I think is interesting is when I did the presentation in Vegas, there was an individual in the room who was asking not confrontational questions, but very pointed questions that were counter my arguments. And I love that type of stuff because, when you research a topic or a subject matter, whether it's trading, investing, robotics, AI, space, astrophysics, whatever, there's always going to be those counter arguments. And I think what makes us stronger as an educator or as a presenter or just as human beings is to understand that counter argument without being hostile towards it and saying, good point. Let me see how I would deal with that question. So actually, I love the engagement that I had. I think that I hope everybody that came up there enjoyed it and had a pretty good time. Personally, I can't wait to do it again. And I want to thank the people from the Money Show for inviting me up to do that. Had a great time, and I would love to do it again. That said, what was my favorite thing, again, was the teaching. There are some pieces that I'm not a huge fan of. So as you guys know, one of the reasons I love doing this show is I believe that P.T. Barnum was absolutely right, that a sucker is born every minute. And when you look at wealth, this was an Investment Masters Symposium. So the Investment Masters Symposium, in my mind, I would imagine when you go there, it's masters of investment, people who have got it down and are conveying the strategy and showing you steps that you can take to improve your overall financial worth. Truth of the matter was, what a lot of the presentations were about, or the exhibitors were about, was, hey, we are a REIT, we're a real estate investment trust, or we are an oil drilling company out of Texas or Houston or Oklahoma, or we are a gold company, or we're a cannabis company, invest in us. And while I get that, I think that the average consumer has many ways they can go out and find out what types of investments to buy into. And I can't help but to feel, when I looked at a situation like some of the presentations that I saw, it really felt like this, where you had, the snake oil salesman pitching to people saying, hey, you can get this and you can do this and you can do that. And I didn't like that aspect of it. I found that to be a little suspect. And again, I think anytime you go into some investment, you really have to look at it from, why is someone telling me I should buy into a REIT or a cannabis ETF or gold or any of these things? Always question it. So there were actually several Online Trading Academy graduates there, and cheers to all the Nope, I didn't even see Ken Polcari. I didn't see him. I don't really know the guy. I did bring up his picture for you, Thomasina, trying to because I thought maybe I would get a picture just for you, but didn't recognize it, didn't see him. There was one group. I won't mention any names. They had a booth there, and an OTA student came out to me and he said, "Hey, what do you think of that group over there? Have you listened to their pitch?" And I said, "I have not listened to their pitch. But I read their marketing materials, and their marketing materials were pretty simple. Marketing materials said, we can get you 30+% rates of return in a down market." Okay. And I asked him, I said, "You tell me what you think of this product and service." And he says, "Well, it looks like you're in a bear market. They're using leveraged inverse ETFs to get you, a greater rate of returns." Okay, God, that's nice. And you pay a fee for that, right? Yeah, you pay X%. And it's okay. And do you really know what you're buying into? I said, "No, you just give them the money and they manage it for you." I said, "Okay, hold on a second. So you're an online trading academy graduate?" He said, "Yes." I said, "Okay, can you tell me what the definition of an uptrend is?" And he's like, "Yeah, series of higher highs and higher lows." Great. Okay. I go, "What's more important, the highs or lows?" He says, "The lows." Great. Wanted to see it pushing up. All right, so now let me flip that for you. "Could you tell me when something goes into a downtrend?" And he says, "Yeah, I can." I go, "Then how would you know if something's in a downtrend?" He says, "Well, we're not making higher highs. We start making new lows, and we see a series of lower highs and lower lows." To which point I'm like, "Damn, who's your instructor? Good job." And I said, "Do you want to pay someone a percentage of your earnings for that service to do that?" He's like, "Well, no, not really." And I said, "Here's the other side of it. They're going to put you in leveraged inverse ETFs." And you guys know I've gone over this many times, where if you're using leveraged ETFs, the doubles or the triples, there were quads at one point, but they've gone away. If you're using those leverage ETFs, the longer you hold them, the more you're giving up. So maybe on Monday's show, what I'll do is I'll create a graphic for you so you guys can see it very clearly. But if you bought the SPY, let's say 350, and a year later you sold it at 350, you didn't lose anything. However, if you're using a double or triple leverage, let's say you're using a triple leverage ETF long or a triple leverage short ETF on SPY, right? You're saying either up or down, I'll get triple, whatever that is. But it didn't do anything. At the end of that year, both the long and the short would probably be down around 15% because of the decay of those leverage instruments. So while it sounds nice, this company is, they're going to take care of you and they're going to make money in a bear market. When a market goes down, you got to ask yourself, are you really that lazy that you just want someone to do that and take a bunch of fees from you for it, when you can do everything yourself, right? You could easily identify a downtrend, set yourself some triggers. If it breaks these levels, I'm going to start going short, whether it's a single SPY, 1-to-1 short with SH, or you go, something triple leverage short. You could do that as well, but at least you're in control. I recommend doing it all yourself. So yeah, I felt like there was a lot of people there that were selling things that maybe didn't need to be bought. Things that may have been outside of certain people's risk tolerance or risk profiles. But again, that's up to us as the consumer to make that decision, whether it's right for us. But as I think most of you would agree, a smooth salesman could sell ice to Eskimos. And there are a lot of smooth salesmen out there. So to answer Thomas's question, that was probably my favorite thing is teaching. I loved it. I love the interaction. I love the people that work for the Money Show. There's some really great people there. So I was excited to see that. What I thought was missing, though, was here's a strategy to grow your wealth. I didn't really see any of that. It was all like, hey, if you look at buying into real estate, or if you look into, all these different things, these are alternative investment vehicles, which might be good for you, might give you a greater rate of return, but honestly, a lot of them pose maybe more risk than I think the consumers needed to get into. So there you go, Thomas. That was my takeaway from it. And if you guys have any questions about it, let me know as well. The Money Show, when it was in Scottsdale, was how I learned about OTA. Cool. Yeah, and I'm really surprised that OTA isn't doing more with the Money Show. I'm hoping that in the future we will. If we do the Masters Investment Symposium, I'm going to propose to OTA different things that we teach there. I think what's missing is just straight up, here's how you manage your long-term retirement account would probably be something good there. When I looked across the demographics, most of them were much older men. I'm saying 65 plus. A lot of older guys who I think are looking for some new great thing to invest in. And honestly, they probably don't need that, right? They probably should go back to a normal model which says, hey, you're 70, you should be 70% bonds, 30% equities. Stop looking for these crazy alternative investments. What's the cool? I don't know which that one is. It's a copyright free one, so I won't get flagged. I was using my favorite band, Fish. I picked some live show stuff for the intro, but I didn't want to get red flagged for anything. So it was something I found in a common domain rock riff. I like it. It's kind of a fun one. Let me scroll back through here. Why is BlackRock saying they're reallocating their portfolio into emerging markets? Not really sure about that one, Patrick. I didn't see the comment from BlackRock saying they're reallocating their portfolio. Again, I don't trust anything that they tell the public. So my perspective on that, Patrick, is if BlackRock is telling you that they're reallocating their portfolio into alternative or emerging markets, they've already done it. They're not going to do it beforehand, because if they told you before they did it, you would buy into that, because retail sheep will do that, right? When BlackRock says, no, I'm going to buy this, they just run right into it. So there's no way that they would release that information unless they already bought it. So now they've already moved if they have already, moved their money into emerging markets. They're telling you because they want you to buy emerging markets, therefore you drive up the emerging market sector, and they make more money than you did because they were in first. So why would they do that? Not quite sure. I think that there's a growing optimism, certainly amongst the BRICS, that there's more power and collusion is an overly negative word, but just partnership and working together of those BRICS countries, which may continue to threaten the US dollar. I'll get to my silver outlook in just a minute. Yeah, I was kind of surprised to see it drift lower this week. I mean, we're sitting at, 2080 for SLV right now. All right, let me keep going here. I just want to make sure I get everybody's questions. I'll get to yours in just a second. Skilled Stocksman. What else? Any question marks? No. Okay, cool. So I'm going to go through just a couple questions that came in. I have some that are more complicated, and I know you guys were probably expecting John O'Donnell today. I didn't have enough time to prepare the show like I wanted to for today with John, so we're going to do John on Tuesday. I'm also going to see about Jerry Baldwin. He wanted to come on next week, so we'll see about getting Jerry Baldwin on the show as well next week. That should be fun. So here's a question that came through. My question is about TLT. I'm trying to use that as an indicator for buying growth names. I'm not quite sure what you mean by growth names. I think you're talking about growth stocks, and that would be, your Apples, your tech stocks primarily. What drives TLT price, and is it possible to use as a gross indicator? I think you mean as a growth indicator. I believe that's what you're trying to say there, but let me explain what that is. So first off, let's go look at a chart of TLT. And as you can see right at the top, it's iShares 20-plus year treasuries. So this is going long-term bonds, right? Long-term bonds. Now, you see that this has been selling off really since March of this year. It's been, trending lower and lower and lower. This is the inverse of what you're going to look at when you look at the 30-year or the 10-year yield. Remember, the higher the yield goes, the lower those prices the bonds are going to go. They start to deteriorate. So here, let's just use the 10. Well, yeah, I'll use the 10. Got the 30. There's the 30-year. So here's your 30-year, and you can see that back in December of last year, it bottomed out and has been creeping higher and higher and higher. Those yields are getting more and more, getting higher and higher. Right now, 2.65% for the 30-year, and if we look at that 10-year, which I just had up, you're looking at 4.158. Also, in a fairly nice little uptrend going back into March. Now, if I bring up TLT, I could actually overlay them. Actually, let's do that. Let me overlay TLT here so you guys can see what that looks like. It's going to be just the inverse, but let's go out on that 10-year, and then I'm going to overlay TLT. Not Theralise. I want the iShares. Huh, that's somewhat interesting. There it is, TLT iShares. Boom. Okay. So notice that these are pretty much the inverse, right? The orange at the bottom is TLT. Right, and they're pretty much the opposite as they go. So what we are looking at with TLT, I wouldn't say is really much of a leading indicator. It's just the result of if yields go up, TLT is going to drop. And if you look at this price chart right now, my feeling is, I'm curious what you guys think. Maybe I can do a poll here real quick. So let me just type it in. Let's go to start a poll, and I'll say over the next 12 months, I can't even type today. THS. Are yields going? I'm going to say right here, we'll type this. We'll do up and down. All right, so there you go. Hopefully I typed that in correctly. There is your poll. It says over the next 12 months, are yields going up or down? I should say yields are going up or down. What do you guys think? Should they go up or should they be going down? You know, again, while we wait for people to type in their responses here, when I look at this chart, you don't have any definitive way. You don't know 100% which way they're going, but I mean, come on, look at the trend. Let me get that 10-year out of there, or the TLT out of there. You know, look at the trend of it since 2020. Yields were down here at 0.34%. Now we're at 4.3. We've increased literally 400 basis points. And that trend has been going higher and higher and higher. You notice that over on the right-hand side of your chart, while it did come down a little bit, it's now starting to trend back up. And I think you're going to end up challenging this 4.35 mark. Now, there's not a lot of reason why it should come down. I'll elaborate on that a little bit more. It would come, the yields would come down if there was tremendous demand for the 10-year, right? If there was a lot of demand, meaning people are just going, I'm going to block myself into that 10-year bond right now. I'm going to load the boat right there, and I'm going to buy that thing. And you'd be getting, 4.15%. Unfortunately, there's not a lot of that demand, right? You don't have the heavy demand for that 10-year. So what's happening is the yield needs to be increased to entice people to buy it. Now, if we look at the yield curve, let me see if I can bring up an animated yield curve for you. I had a really cool one. There's a really cool site. I'll post it in the chat here in just a second if I can get it. Sometimes it's hard to find this one. It's got weird little links to it that sometimes works, sometimes it doesn't. Okay, here we go. It's called the Dynamic Yield Curve Tool. If you want, I will put that in the chat for you guys. Here is your graphic of it. And here is your animated yield curve. So you scroll down here, you'll notice right where we're at. I could go get this 10-year, which you can see is about 4.1%, or I could get over 5% for going into a 3-month. Like, why would I ever consider buying the 10-year when I could get this short end and get a much higher rate of return? The only reason you would do that is if that you felt in 10 years that the short end of that yield curve was going to drop significantly overall and maybe get down to 2 or 1%, then that 10-year starts to look attractive. But right now, it doesn't look good. Like, the 10-year looks very unattractive at this moment in time. Inverted yield curve. So personally, if I were to look at this price chart here, I think that yields are going higher. Now, what's interesting is the group here, we only have half of you voted on this one. You guys all got to throw a guess out there. Come on. I know some of you may not be able to see the box. I think that's happened in the past where some of you can't see the poll. You should all have that poll in there. Type it in real quick. I want to make sure I get as many people as possible here to get a fair, objective reading of it. And then for those of you, right now I'm looking at 41% of you said down. I would love for you to type in a chat. Those who said you think the yields are going to go down, I'd love to hear why. Why do you think that they're going to go down? One of the main pieces that I think is going to continue to drive them up is we have record debt in America, which means they need to sell more bonds in order to cover the obligation on that debt, right? How do they pay the interest on this debt? They sell more debt, collect that money, and use that to pay the interest. So as many people would think, it's kind of a Ponzi scheme. That's why I don't like fiat currencies. That's why I'm such a huge fan of Bitcoin, because they can't make more of it. It's just a fixed cycle. So if all of a sudden the Bitcoin community says, hey, we want to make 1 billion more Bitcoin, can't do it. What's the relationship between yields and inflation? So typically when you have very low yields, that means money's cheap, right? So a high yield means money's expensive. So if you look at this price chart right now, what this tells us is that compared to 2020, money is significantly more expensive, right? Back here, you could get a loan. You could get, if you're a business, you could sell bonds and get really cheap money. You could sell bonds at 1%, 2%. Now, all of a sudden, you're going to have to start, to get people to buy your bonds, you're going to have to be selling them at 4, 5, 6, 8, 10%, depending on your bond quality. So what you end up getting is, in an inflationary environment, you get higher prices. And therefore, yields start to rise because you need to keep up with that rate of inflation. A higher yield actually causes inflation to drop because, remember, money becomes more expensive. And what this does, by increasing like this, it starts to choke off capital. When I say choke off, it means that it's more difficult to raise capital. Therefore, in a high rate environment, you typically don't get a lot of expansion. You don't get companies investing a lot in infrastructure with loans because it's just too costly. Whereas back here in 2020, it was like, load the boat. build infrastructure, do what you got to do. Money is almost free for these companies, right? So that was one of the big factors with what caused the inflation is money was so cheap, everyone was borrowing money, therefore you're pumping so much more money into the economy that caused inflation. Now we're in the exact opposite. We're seeing yields increase, which makes money more expensive. It's preventing people from getting money and spending it. Therefore, you'll start to see things slow down. And we have a retail sales number coming out next week as well, which is going to be really important. I'll talk about that here in just a second. Did announce that there will be next year's Money Show. I will try to. If you go to their website, you go to moneyshow.com, there's a whole bunch of different ones. I'll bring it up here in just a second. Yield is not going down now, but in 12 months, it might go down. Yeah. And again, Les, the big word is might, right? If I just observe the trend right now of the marketplace, we've got a couple of interesting things going on. We have inflation that's dropped significantly, but now you're hearing murmurs that inflation is going to start to tick back up. And we get some CPI numbers coming out here in a couple weeks, and PPI numbers. So we may see that start to tick back up. Therefore, that would be another argument for rates to continue to be raised. And remember, the higher the Fed raises the rates, the more it slows down the economy. And the attempt is to make money more expensive so people don't spend and we get inflation under control. That's one of their mechanisms to control inflation, is make money expensive, meaning it's hard for you to get more and be able to afford the interest payments. So may it go down in 12 months? It might. Right? It might go down in 12 months. And again, no one here has a crystal ball to see exactly what's going to happen out in 12 months. And, you're hearing some people say it's going to be a hard landing. You get other people say soft landing. You have other people saying, not even have to worry about landing at all. Bull market, here we come. And I can make an argument for all three of those points. I can come up with an argument why we're going to have a recession. I can come up with an argument why we're going to have a soft landing and be easy, smooth sailing. I can come up with another one that says, this is just the beginning and we could see another monster bull rally. And I think that's one of the pluses and minuses of my skill set is I can make an argument for anything in trading. The key is what's my plan in place for it, right? If I have a plan in place for, the S&P going to 6,000, okay, great. Some people laugh at you and be like, oh, God, it's at 4480 right now. It's not going to 6,000. Okay. If it does, I'll be right. If not, I'll take my stop loss and move on. So it could go down in 12 months, but I do think that the pressure now is still to the upside for the bond market, given the fact that they're not really slowing down their amount of debt. We're just doing more spending and more spending and more spending. I don't know if you guys saw the statistic recently that said you have over $1 trillion now of credit card debt. Hello, that is probably some of the most usurious interest rate products that you can get. I mean, if we have over $1 trillion worth of credit card debt, you might want to start buying Visa, MasterCard, American Express, and Discover, because those guys are going to be locking in 19 to 29%, interest on their customers. They're going to do rather well. So we have record debt, not just for consumers, but for government as well. And until something fundamentally changes, until we say we're cutting spending, we're going to continue to need more money to pay off our debt obligations. That means selling more bonds. That means yields are going to continue to rise. So at this point, I think going back to my mantra that you guys know I love, which is the trend is your friend until the bend at the end. At this point, the trend is rising yields to choke off inflation and to slow down the economy. And remember, if we continue to have this kind of environment, you're going to start to see the economy slow down. And that could lead to layoffs. That could lead to retail sales declines. I mean, you're hearing, who was it? There were two businesses, Kraft Heinz and Procter & Gamble were both citing slowdowns with consumers, right? That they saw volume of consumer purchases decline. And that may start to become a more increasing metric that people are looking at, right? It's not just the number of sales, but the actual volume, because they made up for sales with increased prices. But the actual quantity of items that they're selling is declining. So, as we've mentioned before, John O'Donnell loves to say the cure for a high price is a higher price. And as we see consumers kind of say, you know what, I'm not going to pay that. I'm not going to buy that right now. We may see changes in the way that these businesses sell their products and maybe prices start to decline. But my advice would be, unless you absolutely need something, don't buy it. Needs versus wants, right? Save your money right now because the future is somewhat uncertain. Put a bigger safety net behind you, right? They say typically have 3 to 6 months of in your savings account should you lose your job or should something happen. I think that that is definitely relevant right now because this economy could slow down. This right here, this chart, while it doesn't look like much, it screams that markets are going to start facing problems later on just because how quickly it has risen. Now, let's put this on a monthly just so I can give you a perspective of what it's done over time. You know, the only time that you see a rise that was this fast and this long was really back here in the 80s when we had that massive spike in inflation. So, you know, just something to keep in mind. I think that this could definitely go higher than where we're at. I think McCormick, and he has a target of 7% for that U.S. government for the 10-year. If we get to 7% on that 10-year, which I still think that's pretty high. I think you're looking at 5.5%, maybe 6%, probably by next year. If situations continue to worsen, if we get to 7, you guys know that the 30-year or your 30-year fixed rate mortgage is going to be about 10%. Right? It's about 3%, almost 3% higher than what the current number is. So right now you can see we're at 4.158. 30-year fixed rate mortgage right now. Let me just bring it up just so I make sure I have the exact numbers and not making stuff up. Let's go 30-year fixed rate mortgage. Right now, looking at, let's see, go to bank rate. Guys, just so we know we've got the source here. There's bank rate. If you trust bank rate's data, oh, great. I'll just, oh, man. Boy, after all the stupid questions, this is annoying as heck. I'm not going to finish. I'm not going to waste my time doing this. Hold on. Let me go back to another one. I hate when I have to do this stupid stuff. But I think right now you're looking at about 7.1% is what they're looking at. I give up. I was going to try to do it, but this is just annoying. I'm trying to do this live. It's not working for me. Okay. Anyway, I won't go through that. Refi rate. Oh, here you go. So rates right now, a $300,000 loan if you had a horrible credit score. And this is a horrible credit score, right? If you had the best credit score right now, 800 and up, you're looking at 7.17 for a 30-year fixed rate mortgage. Notice that's almost exactly 3 percentage points higher than the 10-year. That means if we got to 7% on the 10-year, you're looking at about 10% for your mortgage. And I assure you that will have a profound impact on the housing market going forward. There you go. So, Michael, as far as using that as a value investing thing, I personally don't think that that's what it should be used for. You know, if I'm trading TLT, I have to understand the dynamics of the bond market. So at this point right now, if you're buying long TLT, then you're betting that yields are going to decline, right? So our results of our poll showed that 59% said that in 12 months, yields are going to be going up, and 40% of you said they're going to be going down. All right, well, for those that said that the yields are going to be going up, you'd want to short TLT. You'd want to bet against it. Those 40% who said that yields are going to go down, you'd want to be going long TLT based off of that assumption that in 12 months we would see yields go down. So that's the only real way I would use it, Michael. I'm not using that as a representation of growth stocks or any fundamental value in the marketplace. Just think of it as the cost of capital. And I don't actually like to look at TLT. I like to look at the yield itself. So I pull up the 10-year bonds yield just so I can see that, and I also have the 30-year as well. So that makes it a little bit easier for me to kind of calculate out what the impact might be. The more you see this go up, the more likely it's going to constrict the economic growth, and we'll see problems for our markets, not immediately, but down the road. And it could take a while to get there. But I think that this is certainly a piece that bolsters the argument that we could have a rough landing just simply because of how quickly it has moved up. It's just a dramatic price improvement. All right, next one. Question was from Brad. What are your thoughts on buying UPS? I'm assuming you mean as in buying UPS stock, like shares of UPS. So, you know, once they averted that strike, obviously relief, because the uncertainty for, I don't remember how long the contract's for. Some of you probably do. But over the next few years, I'm assuming it's probably what, a 3-year, 5-year? Some of you probably know that. How long was the UPS contract that they signed with the Teamsters? At this point, whatever that length of contract duration is, that gives them definitive certainty about UPS going forward, at least from a labor perspective. They know their cost of labor. Now, that's great because you've now fixed one variable to your business model, right? However, if you look at some of the things that happened in that agreement, boy, the Teamsters made out like bandits. $170,000 a year to be a truck driver for UPS. Like, if you're working in pretty much any profession right now, Most people aren't making over 170 a year. I bet you the list for applicants at UPS to be a truck driver is through the roof right. It's probably harder. They're getting more applicants at UPS right now than there were people trying to buy Taylor Swift tickets. I mean, come on, 170 grand a year to drive a truck? Nothing against truck drivers, but really? I mean, I know engineers and architects and scientists who aren't getting $170,000 a year. I mean, it seems crazy to me. Anyway, what are my thoughts on buying UPS? Well, I have to say I'm actually not that bullish on it, and I'll tell you why. First and foremost, you look at the monthly chart, UPS really hasn't done much over the past couple of years, right? Even though in 2020, yeah, things are great because everyone is from home just taking delivery. But notice what's happened since then. We really have gone nowhere on this monthly chart. So let me drop it down into, let's say, a weekly so we can see the current trends. This doesn't look good. I mean, really since, May of 2021, it's really just slowly drifted down. Not a big fan of this. And here's the other reason why I'm not a big fan of it. That new contract is going to cost UPS a lot of money. It's a lot. It was a huge increase in their amount of money they were paying to employees. Now, what did they benefit from it? They looked like they're pro-employee, right? From a business perspective, hey, we're doing the right things for our employee. They also averted any strike, which could have created a lot of other issues. But I think they gave up a lot, and that's going to cut into their profit margins. So honestly, I have to say, if I had my choice right now, personally, I'd be more inclined to go short on UPS. And I'm going to do this right here. Let's just see. I'm not going to put any money on the line here, guys, but I'm just going to put a little mark right there, and I'm going to label this where I just said going short. I'm just going to put that right above there, and it has the day on it. So I'm going to leave this on the chart right where that red line is, just as a reference point, because I think that maybe not immediately, but over the coming months and maybe the next few quarters of earnings, that cost of employee stuff is gonna hurt a little bit. I think that's gonna be a problem for UPS. So I personally would be thinking more of shorting this than going long on it, Brad. What do you guys think? Would you want to go long or short UPS? And what would be your arguments for your side of that discussion? I wish I had open microphones over here. I have a system here that would use different microphones, and I've tried it before. It doesn't sound as nice, but I thought about actually trying to set this up so you guys could call in to the show, and we could do like live interaction, which would be fun. Although I did it live on the radio one time, and somebody dropped the F-bomb, and I got in trouble. So gotta love that. Gotta love live media. Anyway, so those are my 3 questions I got from that one, and what I want to do is run through some of the market dynamics. I'd still be long, good company. Okay. Now, at what point, Tomasina, while I'm okay with that, again, there's no right or wrong answer. It's what's your plan. If you think it's a good company, would there be a point where you would say, I'm out, right? You put lines in the sand, and this is why I always ask this stuff, because Larry doesn't have that. When he's looking long term, he's looking at the fundamentals, and he's saying, I'm going to stay in this one because of the fundamentals, regardless of what happens with price. I think with this one here, you've got a pretty nice target right down about 155. It has not been able to break below 155 since the COVID pandemic. Actually, August of 2020. After that, there's some pretty big downside moves, but maybe you're selling puts at 155 and that becomes your target there. And you kind of say, all right, I'll use that as my line in the sand. Just curious. The actual trend shows bearish now. Well, it depends on what time frame, right, GS? It really depends on what time frame. JBG says, since UPS and FedEx tend to have the majority of the market, I suspect they will just raise prices. You're probably right. I mean, how do you offset for a higher infrastructure, higher cost to you as a business? You pass it on to the consumer. You're probably right, JB. Is it'll be passed on to us. My curiosity will be, now that you have somebody like Yellow who's going out of business, right? Yellow's going out of business. There might be some other, trucking companies go out of business. What percentage of that does UPS and FedEx pick up? Also, given Amazon's delivery scope and how big they have gotten, what percentage do they start delivering more packages? It's interesting. I'm not very familiar with the whole trucking industry and CSX and all these ones. I don't know that business model. And I would assume that because of what's happening with yellow, there's going to be better business for some of these other companies. And that may be pushing back towards UPS or FedEx or CSX or some of the other freight companies. By the end of the contract, UPS driver pay going to be up to $49 per hour, or $102,170 for fully burdened cost of employing them. Yeah, I think that it was said for $170 for full time, which still pretty damn good. I mean, I'll drive a truck for $170 grand a year, especially if it's one of those Tesla ones that's fully automated. Yeah, and again, GS, I'm not saying I'm right. I am absolutely not saying I'm right. It's just a thought, right? So if you're looking at the factors that I've pointed out here for UPS, don't forget what JB just mentioned. They will probably raise their prices. And, does that mean that you're not going to send your packages through UPS now? That might be the case. You might use a different source, and we may become more price conscious with our shipping decisions and say, okay, well, I used to be a UPS fan, but maybe I will use FedEx or some other company to ship my freight because they're a cheaper price. And maybe we get a little bit of a price war there, which I think would be a good thing for us. So if you are going short on this one, just make sure you got rules in place. You have a stop loss because, as Thomasina said, it's UPS. I mean, it's not going away. This is a great company. It's just right now one of their financial metrics and dynamics has changed significantly. Does that impact their bottom line massively? We'll have to wait and see. But it just feels like, for me anyway, that I would really think it's going to drift back down to this 155 mark. So I'll leave that there. UAW contract proposal is crazy. Is that United Auto Workers? Or Union of, I don't know what's UAW. Triple time, certain, yep, exactly. Okay, so let me run through the top 7 here, or top 8. Start there for today and work our way up from bottom to top. This is your weekly. So we've had 2 weeks of pretty aggressive sell-off for the NASDAQ. What's interesting for me is we mapped out this area of demand. I'll put it back to a daily because it's clearer. We mapped out this little demand zone here, and we're right at the almost dead bottom of it now in the NASDAQ. So kind of curious to see how things shape up next week. Do we get a little bit of a bounce, or does all of a sudden, we've now broken through 2 demand zones and now headed towards that third? Does this start to show more weakness for that NASDAQ going forward? I have a couple trader friends who are actually very bearish and loading the boat. I'm not in that category. I still am long a lot of stuff, but most of my long potential is through put options that expire next Friday. So I'm not too worried about that one. So NASDAQ was your worst performer on the day, down 0.69. You've got gold is down 0.12%. It's been a really ugly couple of weeks for gold. It was up over 2,000. Now all of a sudden you're kissing 1946. But it's also right down near this low point that we saw on July 27th. So almost going right back into that low point, and maybe that'll act as a bounce for Sunday night into Monday. S&P 500 down 0.11%. Again, we've had the same little demand zone between 4,445 and 4,411. We're drifting closer to it, although today is a little bit of a hammer formation. So I will be looking for this on Monday as a potential long opportunity above that high for today, which was 4,496. So call it a break above 4,500. I'll be looking to potentially go long on a short-term trade here, as I do think there should be a little bit of a reprieve back up, but we'll have to wait and see. Yep, Ricardo, I'll get to silver in just a sec. Bitcoin, nothing really to speak of with Bitcoin, still just traversing sideways. We had a great, what was that, Tuesday? Yeah, Tuesday was a great day, and then just kind of drifted back, and nothing really big there. By the way, as a side note, I don't know if you guys saw, Sam Bankman-Fried had his bail revoked, which I thought was great. Honestly, quit giving this guy preferential treatment. Handcuff him, throw him into jail until his court date. That'd be the best thing. Guy's a scumbag. Let's see, Russell was your 4th place finisher for the day. That had a slight gain, a little spinning top after a sell-off, although the thing I don't like about it is it's not near any supplier demand zone. All right, we're now down below the most recent demand zone, so nothing really significant from a bounce point perspective for the Russell, although you do have an indecision candle that happened out there today. Dollar index, the Dixie up 0.22%, creeping higher. All right, we thought probably end up seeing these 103.40 mark. Well, we may see that here relatively soon. It's been drifting higher and higher and higher. Up to, again, 0.22% on the day. And actually a great week for the dollar overall, which of course is why we had the bearishness in our equity markets. Yep, witness tampering. Gotta love that. Speaking to that crazy girl, I forgot what her name was, but speaking to her and doing an interview with, I think it was a Wall Street Journal or New York Times or something. I mean, the guy just thinks he can get away with anything. I wish that a judge would just slap it down and be like, you know what? We've had enough of you. Let's get you to trial. Handcuffs, shackles, enjoy your bread and water and your cellmate with Bubba. Because you're such a tough guy, Sam Bankman-Fried. He'd do really well in jail. How is Pepe doing? Oh, boy. Get out of here. Put him in Epstein's room. That'll be a good one. Put him in a room. I think you should put all of them in together. You had Do Kwon. You got Mashinsky, piece of Mashinsky, that guy. And Sam Bankman-Fried. Throw them all in the same cell. Let them commiserate together and see how their freedom is. Instead, they get to walk the streets freely right now, which kind of just blows my mind. Bernie Madoff went to jail. These guys are probably far worse than that. Let's see, crude oil, 0.45% today. It actually broke out of that supply zone. When we had this last week, I thought we were going to see a little bit of a sell-off. We got one day of sell-off, and then it ripped right through it. So this is, why you have to be careful shorting something that's in a really strong uptrend. Now we're right back into it. So I don't know what to make of this one. The trend still says bullish. Supply zone may not even be in effect anymore because we blew through that on Wednesday and Thursday. So all in all, oil still looking good. Even though the week was a little bit choppy, it was still up to close the week. And finally, the yields leading the day, 1.19% on your 10-year for the week, showing positive gains. That means that the equity markets most likely were down, and they were. So that's a bulk of your market indexes there, and I guess that's pretty much it for me. Oh, silver. You guys want SLV? So here's SLV, and again, I was selling puts at 21, right? So I'm down below that now. I thought we'd close the gap and maybe bounce there. Well, we haven't. The good news is we've had 4 days in a row where we've been sitting right around this 2080. Next Friday, I have 2150 puts. I also have the 21 puts, which I'm totally fine with it, even though right now it looks like I'm underwater. I'm not worried. I'll be happy to sell those calls against it and ultimately turn a profit in those positions down at some point. Remember, commodities like silver aren't going to go to zero. I'm not worried about that at all. There's obviously utility out there. And we mentioned when we were drawing these little red lines here for demand zones, you had the 2119 mark, and then I also said you have this 2184, and we're right at it now, right? That's the top of that demand zone, and we're right near it. The last ultimate one here is going to be right around 2046. And the good news is we've had 4 days in a row of sideways action. I still am long-term bullish on it, right? But if we have that dollar increasing, that puts pressure on these commodities. So a higher dollar price means that foreigners can buy less silver since it's priced in dollars. That makes it somewhat problematic to have this dollar index, the Dixie here, rally like it has. Yeah, that's not very good for SLV or GLD. And that may continue to push these ones down, but I'm not too concerned about it. At some point, it'll come back. Get to it. You have a fantastic weekend as well. I'm going to wrap things up here. Let's see, Monday. Did I even bring up the economic calendar for Monday? I have not yet, but here you go. Here is your economic calendar. Monday, there was nothing really on the earnings front that I found noteworthy. Suncor Energy, I think, is the one that's reporting earnings on Monday. You have meeting minutes for Australia. For the U.S. markets, you don't really see anything on here. So there's really nothing going on for the U.S. You do have some retail sales numbers for China, but again, I don't trust the Chinese data, so I typically remove China from this list, but it's there, maybe market movers, but really nothing going on for the U.S. on Monday, so it should be a relatively quiet day. You've got no real economic announcements, no real earnings calendar either. That, my friends, is your weekend edition of the Trader Merlin Show. Again, thanks to by the way, before we leave, hold on, don't leave yet. I want to make sure I share this with you. So when I went up to do the expo, I talked to my colleagues at OTA and said, hey, listen, there's a lot of people that can't make this event. And so we're going to do the presentation I gave for Las Vegas. Here is a link to it. The presentation I did for Las Vegas, we're going to do on Thursday. So next Thursday from 4 to 5 p.m., I'll probably try to wrap the show up a little bit early so I can do that. We're going to do this again. So they made a little landing page here. We'll do it next Thursday. I'm going to do the presentation I gave for Vegas. It's, a lot of you know my basic thoughts on this, but I thought some of you might would appreciate it and see kind of the work and effort I put into creating some nice timelines and graphics to help convey why this is important. And I actually wrote an article today for barchart.com. I don't know if you guys saw that one, but the article I wrote for Barchart focuses on that. It focuses on we are in a revolution, and it's a financial revolution. And I would say the most impactful one in my life has been the internet. You guys, in your life, tell me real quick, what is some of the most important changes that have happened in your lifetime where you went, man, if I got in on that craze early on, I would have made so much money on this, it'd be ridiculous. I can think of one in particular because I have friends who are actually making unbelievable amounts of money off of it, and that is vaping, right? I love it. I hate the smell of cigarettes. I was in Vegas the weekend or the last few days, and I had a lady flagpoling her cigarette. What's a flagpole? Where her arm sits there and she's gambling and she's got a cigarette in her hand and the smoke just blows in your face the entire time and she doesn't even smoke her cigarette, right? I hate cigarette smoke. I'd much rather have a vape pen. So with the vape pen, I'll put the link up here in just a second. I'm trying to get it and talk at the same time, Dwight. I don't have that skill set down yet. I think vape pens are an interesting one. And if you were early on with vape juice, and I have a couple friends who are in the vape juice category, multi-millionaires, made huge money off of that. I see somebody saying plastic, cell phone towers, just cell phones, period, right? Computers. I wish I knew how to buy, sell stock earlier in my life. I wish I knew about Bitcoin in 2009. If I had that one, that's the one thing I want. Just $100 of Bitcoin in 2009, you'd be a multi-billionaire today. Electricity, Katut, a little bit before. I'm talking in your lifetime. I'm talking in your lifetime, Katut. I'm sure that you're not that old. What, electricity was, 1800? Katut, you are, if you're 160 years old, looking great, girl. Looking great. Spamming Alta Vista pre-Google. Organic foods, yep. For me, I think the vaping one was an interesting one just because, when I say an innovation, I'm thinking it's something that helps improve your way of life, but also something that you can look at and say, dude, I could have made some money off of this thing. It's dark in Bali. Really? That Bali was not that primitive. You got electricity down there. Wow. All right. Well, I guess lights out brings a whole new term to it, right? You don't have to say it in an Indonesian jail. You don't have to go lights out. There is no light, period. Fun. I think the internet was probably the biggest one for me. And again, I've used that example many times, but there's always something that comes along, and I think right now we're watching the biggest one of them all. My article says, will digital asset boom be bigger than the internet? And personally, I think down the road, it will. We're talking 10, 15 years. When it finally gets accepted and we see that this is a faster, more efficient, more transparent, safer mechanism for money, I think we're going to see that. So anyway, that was the link to the article I put in there, so thank you guys for that one. Enjoy that and give me some feedback if you want. You can actually, the link is actually on my Twitter feed as well. That's where I pulled that from. So let me see. I think I had that up here. If you go to this one, will be my Twitter handle. So for those of you who may be new, those of you who might be new to the show, subscribe to it. Hit the like button if you like the show. And I also put my Twitter handle in there. If you guys want, you can subscribe to that one. I don't use it very much, but I'm going to try to use it more. I'm horrible with social media, but yeah, that was the latest article there. So thank you guys so much. I'm going to wrap it up. I'm going to go enjoy the remainder of my day and have some fun this weekend, and I hope you do as well. Thank you guys for the patience this week. I'm looking forward to doing an event for you next Thursday for anybody. If you have anyone who's is against crypto, if anyone who says, nope, don't like it, scam, fraud, just give them that link and say, just spend an hour in this session just to see what it's about. I want you to try it out. Be open-minded about it because it's something that I think is inevitable. The FedNow program went live, guys, a couple weeks ago. That's the first step toward digitization of our monetary system. It will happen. Hopefully we'll make some money off that in the long run. Anyway, that's going to do it for me. Have a fantastic weekend, everybody. Cheers. I will see you all on Monday. Again, John O'Donnell on Tuesday. And I think we're going to have... oh, wow. I totally drew a blank. Don't you hate when you just forget? Jerry Baldwin. Jerry Baldwin will be on later on in the week, maybe Wednesday or Thursday, but John O'Donnell will be our Tuesday guest. Cheers. Have a fantastic weekend, everybody. I'll see you guys next time. Take care.